We have a financial sector which over the last 30, 40 years has increasingly lost touch with the real needs of the real economy.
Mr. K, welcome here in Utrecht at this evening of the Sustainable Finance Lab. What will be your main message tonight for the people from the Dutch pension fund industry that will be present?
Well, there'll be a very general part to the message, which is to say we have a financial sector which over the last 30, 40 years has increasingly lost touch with the real needs of the real economy. It's become introverted, looking at itself and judging itself by its own criteria. And in terms of specifics in relation to equity markets, what I want to suggest to people tonight is that the era of the public equity markets, which we've all been used to, was essentially a 20th century phenomenon. But these are institutions that came into being to deal first with railways and railroads, and then with the great manufacturing corporations of the 20th century, the automobile plants, the petrochemical plants, and so on. That's an era of business that is now really over. And business is much less capital intensive than it was. Great corporations of today are now firms like Apple and Google. There are very small amounts of operating assets and whose real value lies in the people, the brands, the capabilities which they bring to it. So that's changed the nature of companies. On the other hand, the nature of investment has changed also, because savings used to be gathered in penny packets from private individuals, and now the savings that go into equity markets are heavily institutionalized, so that the world of investment is now dominated by a relatively small number of very large institutions. Now, I think that the implication of that is that what we need is much more direct relationships between investment institutions and the places where the investments are made, much more in the way of skills in these institutions in understanding the underlying investments. And that's a world very different from the one of active trading in public equity markets, which we've been used to.
And do you think that the people from the Dutch pension funds are aware of this problem?
On the one hand, we have the dominant feature of the last couple of decades has been the rise of these global asset managers who are very much oriented towards public markets. And your pension funds and funds elsewhere are placing more and more of their money with these institutions. On the other hand, we see models in Australia and in Canada, for example. We may be moving towards that in the UK, of large pension funds which have both a scale and are acquiring the capabilities to do the kind of direct investment which we're talking about. So I would like to see a future with some large pension funds having these kind of internal capacities, and also the existing large asset managers diversifying what they do and acquiring rather different skills that involve better understanding of the underlying investments.
And what do you think that the people at asset management firms and at pension funds keeps them from making this change?
Well, I think people haven't been through the kind of intellectual revolution that in a way one is trying to contribute to with talks like the one I'm giving tonight. And on the other hand, we have a lot of problems, I think, that arise from regulation. I'm going to argue that in many ways regulation has been part of the problem in the financial services sector rather than the solution. And I think there are a lot of regulatory activity in relation to liquidity, marking to market, and fair value accounting that is actually getting in the way of the kind of changes I'm describing.
Thank you very much for this interview.
Thank you.